Microsoft is quietly turning into one of the biggest infrastructure companies in the world. That's the real story here. Everyone still thinks of Microsoft as Office, Windows, and enterprise software, but the company is now spending at a scale that looks more like Nvidia or Amazon. AI demand is exploding, Azure growth is accelerating, and Microsoft is pouring hundreds of billions into data centers because it believes enterprise AI will become the next foundational layer of business. The problem is that this only works if AI demand stays massive for years. Otherwise, investors may discover that even great companies can overspend. The numbers still look extremely strong. Revenue grew 15% year over year to nearly $83 billion, while operating margins stayed above 46%, which is still absurdly high for a company this large. Azure continues to dominate with roughly 39% growth driven by both traditional cloud demand and AI workloads. And enterprise spending remains strong based on Microsoft's bookings and backlog numbers. But underneath the surface, something important changed. Capital expenditures exploded because Microsoft is racing to build AI infrastructure fast enough to meet demand. That matters, because Microsoft used to be a software company with incredible cash efficiency. Now it is becoming far more capital intensive, which changes the risk profile completely. At current prices, the stock actually looks cheaper than many mega-cap tech names if Microsoft can maintain this level of AI-driven growth. Morningstar still values the company around $600 per share, while the stock trades far below that level. But investors need to understand what they are really paying for. The current business already works extremely well. Office, Windows, Azure, and enterprise software generate massive cash flow today. The valuation debate is really about the future. The market is betting Microsoft becomes one of the dominant AI platforms globally, and if that happens, the stock probably still has upside. But if AI spending slows or monetization disappoints, this stock suddenly looks much more expensive than it appears right now. Microsoft is trying to own every important layer of enterprise AI. It has Azure for infrastructure, OpenAI partnerships for models, GitHub for developers, Office for productivity, and Copilot to inject AI into the entire ecosystem. Strategically, this makes perfect sense because Microsoft already owns the enterprise customer relationships. AI is simply another layer the company can sell into its existing customer base. The risky part is the scale of investment required. Microsoft is betting that enterprise AI adoption becomes permanent and massive enough to justify enormous infrastructure spending. If the demand curve weakens, returns on all this spending could disappoint investors badly. The real war is happening against Amazon, Google, and increasingly Oracle. AWS still has enormous credibility in cloud infrastructure, and Google remains extremely strong in AI research and consumer ecosystems. Microsoft's advantage is integration. Most companies already rely on Windows, Office, Teams, and Microsoft security tools, so Azure becomes the easiest way to adopt AI without rebuilding workflows. That ecosystem advantage is incredibly powerful. But Microsoft is not unbeatable. Google still dominates search and consumer AI mindshare. AWS remains a monster in cloud infrastructure, and open-source AI models could weaken the importance of proprietary platforms over time. The biggest risk is very simple. Microsoft may be building too aggressively for a market that ends up smaller than expected. AI enthusiasm is everywhere right now, but investors are assuming enterprise demand keeps accelerating for years. If businesses slow spending or AI tools become commoditized, Microsoft could end up with lower returns on gigantic infrastructure investments. There's also competitive risk because the AI market is evolving unbelievably fast. Today, Microsoft looks like a leader, but technology shifts quickly and margins could compress if pricing power weakens. The other issue is that AI infrastructure is expensive. This business is becoming less asset-light and more dependent on massive ongoing capital spending. If Microsoft executes properly, this becomes one of the strongest businesses on Earth. Azure could become the default infrastructure layer for enterprise AI, while Copilot turns into a recurring productivity upgrade sold across the Microsoft ecosystem. In that world, Microsoft is not just selling software anymore. It is effectively monetizing enterprise AI adoption across cloud, productivity, development, and security at the same time. That is the bull case. If AI demand remains strong for the next decade, Microsoft may end up even more dominant than it already is today. This is no longer a classic software stock. Microsoft is becoming an AI infrastructure giant with software economics attached to it. That makes the opportunity massive, but it also makes the risks very different from what investors are used to. This stock is for people who believe AI will become deeply embedded into enterprise operations, and that Microsoft will remain one of the central platforms enabling that shift. The risk/reward still looks attractive because the core business is already incredibly strong, but the company is now making one of the largest long-term bets in corporate history. Microsoft is no longer defending its dominance. It's trying to build the next one. I'll break down the next one soon. Subscribe if you want to stay ahead.